That's the bell ringing. Bang. It is 9:30 Eastern Time, and the trading session this Thursday morning has begun. It is April the 2nd. Let's see how we do. This is the very, very early going. I'm seeing a little green on the left-hand side of the screen, but not much. Two-thirds of the Dow 30 have opened in the red. They are down, and at this moment, the Dow Industrials are down 126 points. That's about a half percentage point. How about the S&P 500? I think we got a similar loss there. We're down one-third of 1%. That's not much. 8 points down on a 2,400 index. Show me the NASDAQ. Home of the technology companies. That's an indicator of how tech is doing this morning. That's down 0.25%. So the bottom line here is you've got fractional losses, I don't call it a fraction, fractional losses pretty much across the board, and the Dow Industrials, bottom right-hand corner of your screen, are virtually dead even. I believe that without Walgreens, the Dow would actually be positive. Now, we're going to do the same thing as we've been doing recently. Along the left-hand side of the screen, we're going to show you whole industry groups, groups of stocks that have very much been in the news and which are moving. As we get that rolling, you read it off the left-hand side of the screen, and I'll talk to our commentators about what's going on here. Eddie Gabor, Scott Martin, both with us. And I'm going to ask the same question to both of you. I bet that you are seriously concerned about re-challenging that low on the Dow, 18,591. You wouldn't want to see that, would you, Eddie Gabor?
No, we don't want to see that. But again, as we said last week, we've warned clients that the news is going to be really bad economically. So these negative news really shouldn't come as a surprise. I think what we need to focus on is when we're going to get our economy going again, because until that happens, this pressure to the downside is going to continue, because at the end of the day, this has been a self-induced recession and bear market. And what's going to come out of this is some really good buying opportunities. But here in the near term, to expect any good news during this shutdown is just false hope. So we need to focus on how we get this thing going again, so that way these wonderful companies we can invest in will be worth a lot more 12 and 24 months from where we sit today.
Okay, Scott Martin, same question to you. Heaven forbid that we go back and challenge the low of 18,591 on the Dow, right?
Well, I think it's coming, Stuart, so we got to be ready. I'll tell you what the real challenge is. Do we defend that low? Because if that's a good low and we actually hold those levels in the Dow and the S&P, that would be a good sign that the market has probably found a firm bottom there. And that obviously goes along with how the data comes out in the meantime. But actually challenging that low and holding it, I think, would actually be pretty constructive.
Okay, now I'm going to read out some of the stock market quotes on the left-hand side of the screen from these different groups. Producer, just keep them flowing, please. I'm reading them for the benefit of our radio listeners. Whomsoever is actually driving these days, you can listen into this. Walmart is down a little. It's at $112 a share. I've got big tech on the screen right now. I see Microsoft up and Google up. Not very much. Microsoft is at 154. Google just turned south, along with Amazon, Facebook, and Apple. We're going to keep those numbers flowing for you. You can see exactly what we've got. The financials. It's been a long time since we saw any good news raising financial company stocks. It's not there today. JP Morgan, Goldman, Citigroup, Wells, all of them on the downside. Wells Fargo goes back to 26. Morgan Stanley, the lone gainer, up just 6 cents. That's it. The credit card companies, again, moving nicely higher. MasterCard is at 231, Visa is at 153. No joy for Amex, though, down at $77 per share. I want to break in for a second. Okay, I'm going to put oil on the screen. President Trump thinks that the Russians and the Saudis are going to get a deal of some sort, help out the world glut that we've got going right now, but nothing's going to replace the loss of demand from the virus impact on the global economy. But $22 a barrel for oil right now. Lauren, come on in, please. Tell me about Zoom Video Communications, because that's become the teleconferencing company of the moment.
Yeah. Almost 100,000 schools are using it for classes. I use Zoom to take virtual yoga classes. As a result of all of this, well, the stock is down 11% now, but Stuart, the news is quite good. Daily users in the month of March, over 200 million people. 200 million. Their highest ever before that was just 10 million. The stock's at 121. Remember the IPO? went off last year at $36, so down today, but obviously the rise has been monumental.
Did you say 200 million new users?
Yep. In the month of March, correct.
Good Lord. I just don't know how they make their money, but it's a huge numbers. 200 million total users, just like that. That's huge. Okay, but the stock's down 10%. All right, come on, Ashley, what have you got for me from Ford?
Yeah, you know, Ford just released its sales numbers for the first quarter, and overall sales were down 12.5%. Got not great numbers at all. Now we're hearing a statement from the head of sales of Ford, who says that the company believes that once we get through this crisis, that some level of government stimulus, both to U.S. consumers and the auto industry overall, would be appropriate. In other words, a signal, a message, if you like, that we're going to need help, not only the consumers, but the auto industry as well.
Okay, and look at the stock, $4 a share, up just 3 cents as we speak, 4.43. Ouch. All right, Starbucks. What have they got going for us, Lauren?
Good news for workers. They get $3 an hour extra, and now Starbucks is going to extend that pay raise and some other provisions for an additional 2 weeks, so until May the 3rd. They're also considering, to ease the drive-through lines and the pressure on the drive-throughs, if you place your order mobily, you can then go to the front door, because the dining rooms will remain closed, but then a worker would hand you your item at the front door, so the line at the drive-through wouldn't be as long. Stock's up. Nice gain today, over 7%.
I'll say, I'm sure they'll take that. Thanks, Lauren. Yeah. Back to our guests. Eddie Gabor, here's a question for you that we're going to ask throughout the program today. Look to the other side of this, just the other side of the virus, when we're coming out of it. What kind of stock, what kind of company looks good to buy now if you're looking to the other side?
So I think you still need to focus on strong balance sheets. So when you look at the amount of cash that the Microsofts of the world have, the Apples of the world have, in my opinion, those two are wonderful long-term plays. On the healthcare side, United Healthcare Group, Johnson & Johnson are very, very strong balance sheets and companies that have some nice upside. In regards to maybe taking a little bit bigger risk, I really like the home builders in the second half. Take a look at where we're going to be. We're going to have record low interest rates and pent-up demand. And I'm betting that the U.S. consumer comes back like gangbusters once we get out of this. So home builders have been decimated, and I think there's lots of upside, in my opinion, on that in the second half of 2020.
All right, thanks very much. I want to go back to Lauren. You've got something more on Zoom communications for me?
So we were saying, why is this stock down so much when they have so many people using it right now? And the answer is they've got new competition, specifically from RingCentral. They're about to offer a video conferencing offering, and because of that competition, it's putting pressure on Zoom today. Looked into that one for you.
It sure is, down 13%. Thanks very much indeed, Lauren. Somebody has to explain a 14% decline for a company that's very much in the news. Nice job there. Look at this. We've turned around. Now the Dow is up, okay, 32, Nasdaq's up, okay, 21, S&P's up 9, but I see some green on the left-hand side of the screen. Quick question to Scott Martin. I asked you this before. What looks good when we come out on the other side? You said big tech. Tell me, which big tech companies do you like?
3 names for you, Stuart. Microsoft, Amazon, and Google. Strong balance sheets, positive free cash flow, and consumer demand. A lot of those companies are actually doing very well in this economic malaise. I think they'll come out smelling very good, and the consumer is going to come back really strong, like Eddie said. So that's more demand for their products and services.
Okay, we're on the upside. I'm Scott. We appreciate it. Eddie Gabor, thanks for being here. All good.